Hello and welcome. You're watching Market Cafe on ET Now. First up, let's look at the US market. US futures, if you see, have continued its positive momentum on Sunday. Also, they have gained on the back of weaker than expected jobs data, which have actually bolstered the fact that there could be US rate cut happening soon. Now, if you see, US markets also on Friday closed in green, given the fact that US April unemployment rate came in at 3.9% as against expectations of 3.8%. And nasdaq ends around 2% higher on Friday, while Dow adds around 1.2% and S&P 500 gained close to 1.3%. Apple was one of the key stocks that was in focus. It gained around 6% after the company announced a $110 billion buyback. Apart from that, it was the drug maker Amgen, which gained around 12% on the back of strong quarterly earnings on Friday. If you look at the crude prices largely remain stable at around the $83 per barrel mark, but the last week's losses were one of the steepest that we have seen. In fact, the steepest weekly fall in the last 3 months, and that was on the back of rising US inventory, and given the fact that there have been worries about slower demand growth coming in for crude going forward. For Asia market, if you see, they are tracking gains from the US market, and most likely all the Asian markets continue to trade in green currently, what we are looking at. Apart from that, if you see, the implied GIFT Nifty is also suggesting the fact that we might open in green currently in the Indian market as well. The implied Nifty is around 100 points up in trades so far.
Right, absolutely, Soumya. So that's the way how the global markets are looking like, the handover that we receive from the global markets. But yes, take a look at what the crude markets are doing at this point in time. I know that Soumya did allude to that as well. So let's take a look at what the crude is doing, because it's poised. It actually saw the steepest weekly loss in about 3 months, and this on back of lack of clarity on the rate cuts that has actually spooked the investors. If you look at Brent crude, it settled at around $82 per barrel mark, and also WTI crude below around the $78 per barrel mark. Let's take a look at what the rates are doing at this point in time, where the Brent crude as well as NYMEX crude is traded at. So if you look at NYMEX, it is hovering around the $78.5 per barrel mark, while Brent crude is at around $83.3 dollars per barrel mark. But that's the way how the crude markets are looking like at this point in time. But let's take a look at what the US economy did actually. It added fewer than expected jobs in the month of April, lifting hopes that the Federal Reserve will be able to start cutting rates in the coming months. The non-farm payrolls increased by about 1.75 lakh on the month, below the estimates of 2.4 lakhs. The unemployment rate ticked higher to about 3.9% against the expected that it would hold steady at around 3.8%. The jobless rate, remember, is tied for the highest level since January 2022. And the biggest talking point this morning definitely has to be the highlights from Berkshire Hathaway AGM. Let's take you through some of the key takeaways. You had Warren Buffett that reflected on the passing of his longtime partner, that is Charlie Munger. Also, a rather somber tone on mortality, saying that he hopes he gets to attend the AGM next year as well. Talking about the US economy, Buffett said that the focus continues to be on the Federal Reserve, but the fiscal deficit deserves an attention. He's also lauded the Federal Reserve chairperson, that is Jerome Powell, calling him quote-unquote a wise man. However, he noted that the central bank needs help from lawmakers to rein in the growing US deficit. On the other hand, he spoke about the Apple holding, and he said he continued to sound optimistic. He said that the iPhone is the greatest product of all time. And finally, on India, Warren Buffett expressed that there are a number of unexplored opportunities. All right, moving on then, and in important commentaries that kicked in right after the Federal Reserve chairperson, that is Jerome Powell, kept the interest rate steady yet again. Your Chicago Federal Reserve President Austin Goolsbee, who said that the progress on the inflation has stalled, which makes sense to wait before cutting rates. Meanwhile, Federal Reserve Governor Michelle Bowman said that she expects inflation will remain elevated for some time, but added that she still anticipates price gains will eventually cool with the interest rate held at current levels. And also you had the New York Federal Reserve President also continuing to reiterate that the central bank's 2% inflation target is key to achieving price stability. His defense of inflation comes amidst the persistent calls from some corners of the Federal Reserve to overhaul the way it guides and set and communicates policy. All right, on that note, we slip into a break on this edition of Market Cafe. But here's what you have to look ahead on the market. One is the most important Berkshire AGM takeaways. We will be joined by Vishal Khandelwal, who's the founder of Safal Niveshak, at around 10 a.m. Along with that, you will have at 9:20 a.m. Rajiv Thakkar of PPFAS MF to talk about those key takeaways. Apart from that, let's talk about earnings then. At 9:30, catch the management of Godrej Properties outlining its earnings. Apart from that, you will also have Titan's MD joining us to talk about the quarter gone by for the company. And also, that's not it. 9:50 a.m., you will have Anuj Jain, who's the managing director at Kansai Nerolac, outlining its earnings. Along with that, at 10 a.m., we will be having Arun Maheshwari of JSW Infrastructure. And that's not it. 10:20 a.m., catch the management of Tata Technologies talking about the quarter gone by. So action-packed lineup coming in for the market at 8 a.m. But for now, it's a break on this edition of Market Cafe. Welcome back. You're watching Market Cafe on ET Now, and let's talk about earnings then. You had Kotak Mahindra Bank that reported its Q4 earnings over the weekend, and it's actually gone ahead and beaten analyst estimates on all counts. We saw the net interest income see a sharp rise, crossing the levels of about 12,000 crore rupees mark. See, it's trading higher by about 13.2% on a year-on-year basis, while you had PAT that jumped about 18%. If you look at the NPAs as well, they have improved sequentially, with the gross NPAs coming in at around 1.39%. You also had Kotak Mahindra Bank's MD and CEO Ashok Vaswani tell ET Now that he worried more about the reputational impact than the financial impact of the RBI curbs. Remember that the stock has been under pressure on back of the RBI restrictions that came about almost a week ago or so. What else did the MD and CEO said? That the bank will focus on deepening relationship with the existing customers while fixing the tech infra. In fact, just listen to the MD and CEO, what else he had to say.
The Reserve Bank of India order obviously has had an impact on both our franchise, our reputation, which, obviously doesn't feel good. And like I said, totally and utterly committed to coming back. That's our number one priority. There will be a period when we won't be able to issue credit cards and we won't be able to do customer onboarding using online and mobile channels. Obviously, the credit card business will be affected, and I think the other business that will get affected is our 811, which is a very, very important business for us. We want to utilize this period to actually focus on our existing customers and enrich the experience and hopefully deepen the relationship with the customers. And if we are able to do that, and if we are able to fix the technology and get it to the expectations of the RBI, I think we'll come out stronger on both fronts. If we are able to do all of this, frankly, I'm more worried about the reputational impact than I am about the financial impact.
The experience of past 2 weeks, have you seen any kind of trend as far as branches is concerned? Is there customers which you would onboard digitally are not there? Because you mentioned last time in the investor presentation, it was 90% of the customers were there through digital channels. So what has been the experience so far, and what are the steps you have already taken?
We said 98% of customer transactions from savings customers goes through digitally. There is no impact whatsoever of our existing customers doing transactions through any channel, physical, mobile, net, or any restrictions on us cross-selling product through digital channels.
All right, so that's the management of Kotak Mahindra Bank. But let's talk about what the brokerages have to say this morning. And in fact, if you look at the brokerage calls, pretty positive coming in for Kotak Mahindra Bank, with JP Morgan going ahead and upgrading it to an overweight stance from an erstwhile neutral stance, also giving a target of about 2,070 rupees per share. They're saying the asset quality is solid coming in for Kotak Mahindra Bank. They believe that the liquidity is comfortable to push for growth going ahead. Also, what they're saying is that the bank is pretty cheap for growth, stating that the valuations are attractive for Kotak Mahindra Bank. They believe the bank can continue to compound balance sheet at 16% CAGR for over the next 2 years. Apart from that, your Bernstein has maintained market perform rating on Kotak Mahindra Bank with a target of 1,650 rupees per share. They're saying the healthy loan growth and shift to unsecured segments continues. Solid deposit growth, even if it has been led by term deposits. And lastly, let's talk about what Investec has to say about Kotak Mahindra Bank, where they are actually maintaining a buy stance with a target of about 2,300 rupees per share. They're saying the impact of RBI directive is at 2% of FY25 estimated profit before tax. They say enough levers to maintain growth and profit, and they believe that the bank continues to command the lowest cost of funds amongst its peers. Therefore, for Investec, Kotak Mahindra Bank is a top pick. So yes, enthused by the earnings. Hopefully, we will see some sort of a rebound creep in for Kotak Mahindra Bank, with the brokerages also giving a good thumbs up for that particular counter. But it's not only Kotak Mahindra Bank that reported its earnings. You also had FMCG majors or consumption majors, Titan as well as Britannia, that came out with their earnings as well. My colleague Sharad is here to do all the number crunching and also tell us what the brokerages are penciling in. Sharad, good morning and over to you.
Well, there's two important earnings coming from the consumption space, and the first one being Britannia, where largely inline set of numbers have been reported. Now, if you look at the revenue as well as the PAT segment, the numbers have come largely in line, but for the margin segment, it has beat the analyst estimates as well. Now, the volume growth is expected to be roughly 4 to 5% as per analysts at Macquarie, and they also stated that there is a rebound in the market share, which is coming aided by the pricing action. Also, the growth in the focus states have outperformed the other regions, and two important things to note down from earnings is the modern trade and the e-commerce registered a double-digit growth, while the cost efficiency initiatives are yielding savings of almost 2% when it comes to the total costs. Apart from this, the second important earnings to be focused would be Titan. Largely overall weak set of numbers coming in. Revenue was above estimates, but when it comes to the margins, there was a miss in the estimates and a slight miss coming when it comes to PAT. The company also sold gold ingots of almost 1127 crore rupees. And if you look at the segmental breakup, there has been an increase of almost 8% in watches in the revenue segment, while for the eye care segment, it has been roughly flattish, while the jewelry segment, that has jumped up almost 17%. EBIT margins, if you look at it, there has been a slight decrease when it comes to jewelry and watch, and even eye care segment, that is where the jump has happened when it comes to the margins. And carrot lane segment, the revenue has grown 29% on a year-on-year basis. But overall for Titan, weak set of numbers have been coming in.
Right, hang in there actually, Sharad. You saw strong fourth quarter results coming in for NSE, with the current price in the unlisted market between 4250 and 4500, which is a jump of about 30%. So what's the highlights coming in for NSE earnings?
Well, it's a very strong set of numbers coming in for NSE for the fourth quarter. While the revenue has jumped up 46% sequentially, the PAT has also jumped almost 26%. Now, importantly, strong set of numbers coming in, and also the company has declared a dividend of 90 rupees per share, and importantly, a bonus of 4 shares for every 1 share held. Now, importantly, the consolidated EPS, that has come in almost 50 rupees per share, actually more than that. And also the market share they have declared is almost 92% in the equity cash market, while it's 94% when it comes to the options market. Also, the important number is what's the trade happening in the unlisted space, and we did a small channel check amongst brokers. Current the price is ranging between 4250 to 4500 rupees per share, and over the last 1 year itself there has been more than 30% growth. Also, looking at the valuations, how they are stacking up, that's almost at the price to EPS levels. For NSE on a trailing basis, it's coming in at 24 times, and on a forward basis for BSE, it's coming in between 42 to 45 times.
All right, thank you so much for that, Sharad, for getting us all of those highlights coming in for the Q4 earnings. But let's stay with the earnings and let's talk about M&M Finance that reported a mixed set of numbers in the quarter gone by with a beat on NII as well as operating profit front, while PAT and NIMS actually were amiss. Gaurav is here to tell us exactly how the numbers were and what was the commentary coming in from the management. A very good morning to you, Gaurav. And yes, primarily, yes, everyone's focusing on M&M Finance numbers, but also the commentary with regards to the fraud they detected at a branch, isn't it?
Well, yes, as you rightly said, that commentary was also important in terms of M&M Finance. And if you look at the numbers, it was a mixed set of numbers. So, for example, net interest income was actually a beat. It increased almost by 14% on a YOY basis, while PPOP and PAT saw a miss because PPOP increased by 24%, but it was a little below the street's expectation. And PAT also was down actually 10%, and this was because of the fraud that that was detected in M&M Finance. Apart from that, if we talk about the Q4 snapshot, net interest margins also declined to 7.1% versus what it was at 7.4%. If we talk about asset quality, the stage 3 assets now stand at 3.4% versus what it was at 4% on a QOQ basis. And lastly, the company also declared dividend of 6.3 rupees per share. Apart from that, there was a highlight for FY24 because of the fraud that recently happened. But on that, now the commentary has come from the management. They have said that the fraud amount was exactly at 135 crore rupees. And at the same time, this fraud happened at the Mizoram branch. 2,887 accounts were identified for the fraud, and at the same time now the company has said that they have employed a restoration team in Mizoram, and at the same time they have also identified initiatives to further strengthen the controls of the fraud controlling mechanism. And apart from that, the company has also come up with the a positive outlook for FY25. They have said that they are now partnered with IBM to develop 24/7 super app for the company. And lastly, they are also expanded into prime customer segment into vehicle loans. So all in all, mixed set of numbers came up from company. We also got some commentary on the fraud, which was actually much needed. And on back of this, we will definitely watch out for what happens in the share price of M&M Finance.
All right, thank you so much for that, Gaurav, for outlining the numbers as well as actually highlighting that important commentary coming in for M&M Finance management. But on that note, we slip into a break on this edition of Market Cafe. Stay tuned. More on the other side. Don't go anywhere. Welcome back. You're watching Market Cafe on ET Now with me, Cheryl D'Souza, and let's talk about Indegene IPO, which has actually opened up for a subscription. Actually, in fact, is opening up for subscription from today onwards, and it will be open right up to the 8th. Let's go across to Sharad to get in more details of this particular company, what it does, and what's it planning to do with the IPO funds that it is aiming to raise. Sharad, over to you.
Well, yes, Indegene's IPO opens today and the IPO closes on 8th of May. The price band, if you look at it, is between 430 to 452 rupees per share. The total size is roughly 1842 crore rupees, out of which the fresh issue is 760 crore rupees. Now, the company has raised roughly 550 crore rupees from anchor investors and bigger names such as Capital Group, Fidelity, Abu Dhabi Investment Authority and Premji Investment have come in the foray. Importantly, the objects of this issue, they include the repayment of indebtedness to the subsidiaries and also funding capex for the company and its subsidiaries. Now, looking at the company provides digital services in the life science industries, and important segments where it operates includes enterprise commercial solutions, omni-channel activation, enterprise medical solution and also clinical solutions. To put it in a simple manner, it's a SaaS product when it comes to the pharma space, especially in the life science segment. Company is not having any peers as such, and importantly, if you look at the revenue for FY23, the revenue was more than 2,300 crore rupees, while the margins for this business stand at 17%.
All right, thank you for that, Sharad. And Ansh, let's bring you on board to talk about what's the F&O market looking like, what's the cues that you need to watch out for. Ansh, good morning.
Right, good morning. So starting with Nifty first, as you can see in the chart as well, we saw strong selling in the previous session, forming that bearish engulfing candlestick pattern, which usually indicates a potential reversal in trend on downside. However, we have some good support at 20 DMA, where it has been taking good support from last around 7 to 8 sessions. So we can hope for some good support and a good positivity here. Whereas if we talk about index futures, we are seeing open interest declining by 5%, indicating long unwinding, which is a bit of a cautious signal. well. Whereas if we talk about option front, then here we are seeing call writing happening at 22,800 and 22,600 strike, indicating resistance around this level. Traders not expecting Nifty to go above this level. Whereas on downside, we are seeing some mild put buying happening at 22,200, indicating option traders expecting Nifty to break that 20 DMA level on downside and go around this 22,200 mark. But moving on to Nifty Bank. As you can see in the chart as well, Nifty Bank has been going in an upward trend, but it is currently trading around that resistance of upward channel, which is causing some selling in the index. Whereas if we talk about index future, we are seeing open interest declining by 8%, indicating long unwinding similar to Nifty, showing some cautious signal here. Whereas on option front, we are seeing call writing happening at 49,500 strike, indicating strong resistance around this level. Whereas on downside, we are seeing put buying happening at that psychological level of a 48,800, indicating traders expecting index to fall around this level or even below this level. Whereas if we talk about HDFC Bank, this is very important because HDFC Bank can provide some support to both Nifty and Bank Nifty, as this is a heavy weighted stock, and the stock has been trading around its 20 DMA from around 18 to 20 sessions. So unless until we don't see a decisive breakdown from this DMA level, we can expect some support to both Nifty and Bank Nifty. Lastly, let's also talk about FIIs. So in index futures, FII have covered around 52,000 long contract. They have added 19,500 short contracts. So net to net, we are seeing a down move of around 72,000 contract, due to which the total long position has slipped from 53% directly to 43%. This is the biggest long covering seen in at least 41 sessions, and the total long has fell by 25% in one session itself. With this, the total FII or index future, we are seeing selling of around 4,400 contract, 4,400 crore, out of which the total FII selling in Nifty was around 2,900 contract, which is around 65%. Lastly, let's also talk about stocks in focus that will be in focus today. And we are seeing long build-up happening in Coal India and NMDC, where short build-up in Coforge and MRF. So keep an eye on the stocks.
Absolutely. Thank you so much for that, Ansh, for getting us all the updates or cues coming in from the F&O market. But let's talk about a stock that will be in focus, and that is Godrej Consumer Products, because they will be reporting their Q4 earnings later today. And what are we expecting for their Q4 earnings? If you look at the revenue, we are expecting a mild uptick, about 3.7%. We are expecting the revenues to come in at around 3,318 crore rupees, while the PAT, we are expecting a jump of around 4.6%, coming in at around 473 crore rupees. If you look at the margins, a mild bit uptick is what we are expecting on a year-on-year basis. Last year in Q4, the company clocked in a margin of around 20%. We are expecting the margins to come a tad bit higher at around 21.7%. What to expect is the volume growth. We are expecting the volume growth to come into around 6 to 7%. Delayed season, high base is likely to hit their HI business as well. We have to watch out for the rejig in the Africa business, the Naira devaluation as well. And also other factors that you need to watch out for is on their margin outlook, the demand outlook, as well as the Raymond Consumer business actually integration update on that particular front. So that's all that you need to watch out for when Godrej Consumer comes out with its numbers later today. But let's talk about then the cement earnings, and so far which all companies have come out with their earnings. What's the outlook that we are making out of it? Let me bring on board actually Ashesha for that. Ashesha, you track the segment very closely, and how are the numbers coming in for the cement sector as a whole so far in the Q4?
Well, yes, cement companies have reported better than expected set of numbers so far. Better cost efficiencies drove results so far, and they partially offset the negative impact of lower realizations in the quarter gone by. Remember, cement prices were on the lower side on a sequential basis, and that is what impacted realizations in the fourth quarter. On an average, companies have reported volume growth of about 24.4%, and this is on account of strong demand across geographies. As far as EBITDA per ton is concerned, that saw a decline of about 9.4% on account of lower realizations, and the realizations declined by about 5.5% on a sequential basis on an average. This is on account of lower cement prices on a sequential basis, and total cost declined by 4.4% on an average. This is on account of operating leverage, lower expenses and lower power and fuel costs in the quarter gone by. But as far as Q1 FY25 is concerned, it is expected to remain a soft quarter, and that is because management commentaries highlight that cement prices are expected to remain subdued in the first half of FY25. Elections are expected to impact first quarter. Monsoon is likely to impact cement pricing in the second quarter, and hence managements have indicated that cement prices, if at all were to improve, will only improve in the second half of FY25. Let's also talk about Birla Corporation. Remember, it reported its numbers over the weekend, but it has reported better than expected set of numbers. Let's talk about two parameters in particular. One is EBITDA per ton. Now, industry has reported EBITDA per ton decline of about 9.4%, but this company is one of the very few companies which has reported EBITDA per ton growth of about 8% on a sequential basis. Apart from this, as far as realizations are concerned, that has also come in better than what the industry has reported so far. So industry has reported realization decline of about 5.5% on a sequential basis, but Birla Corp has reported a decline of just 2% on a sequential basis. So Birla Corp numbers as compared to what the cement industry has reported so far has come in much better. As far as volumes are concerned, they grew by about 15% on a quarter-on-quarter basis. So better than expected realizations drove EBITDA beat this time around. So cement numbers have been better than what the street was working with, but Birla Corp numbers in particular stand out, and the stock in focus on the back of that.
Right, thank you so much for that, Ashesha. But let's move on and let's talk about all the national headlines that you need to watch out for. Firstly, politics over the Poonch attack peaks as ex-Punjab Chief Minister stokes a controversy, calls the terror attack on Indian Air Force convoy BJP's pre-poll stunt. BJP hits back, says the Congress's real mindset has been exposed. And Delhi logged its hottest day of the year on Sunday, clocking a maximum temperature of 41.1 degrees Celsius, which was 2 degrees above normal and 1 degree rise from the day before. According to the IMD, warmer days are likely to continue in the national capital, and the temperature could cross 42 degrees Celsius this week. A day before the third phase of Lok Sabha polls, Prime Minister is on a two-day visit to the eastern state of Odisha. The Prime Minister is expected to go to visit the Sri Lingaraj temple today and address two election rallies. An Indian women's 4x400 meters relay team qualified for Paris Olympics after finishing second in its second round heat in the World Athletics Relays. The women's team clocked a 3 minute and 29.35 seconds to finish second behind Jamaica to book a Paris Games ticket. And continuing with sports, inching closer to the playoffs, the Kolkata Knight Riders thumped Lucknow Super Giants by 98 runs. With the victory, KKR is now leading the points table and looks set to qualify for the Final Four. And in the second clash, Chennai Super Kings emerged victorious against Punjab Kings, keeping hopes of qualification alive. Alright, so those are all the top national headlines to watch out for the day. With that, it's a goodbye from me, Cheryl D'Souza, on this edition of Market Cafe. But as we wind down this edition, here's what Neelkant Mishra had to say about his key investment ideas and the themes that he's looking forward to.
So from a market standpoint, which theme to your mind is going to become big to mega, and where to your standpoint stock prices are not pricing in already 3-4 years of future growth?
I would say that energy is a big problem area for us, right? And it will be for the next several decades. We are trying to do what very few countries have done, which is grow from low income to upper income without controlling our own sources of energy. So we're not, other than renewable energy, which frankly, we have a lot of sunlight, we have a decent amount of wind. We should be doing a lot more, and we are. But at the same time, not every type of energy consumption can be converted into electricity, and not very quickly anyway. So energy is going to be a huge challenge for us, and therefore a big opportunity for entrepreneurs and businesses, and therefore for market investors as well. I think the second is just construction. So while I think on the real estate side, I'm very constructive. I think the real estate cycle has already been on for the last 2 years or so. And my sense is when these cycles turn, they don't end very quickly. So what we've seen so far is a sharp increase in sales, but I think construction needs to pick up going forward. And therefore, we are very, very bullish on the inputs to construction. Some are late cycle construction, so the cables and wires and the paints and the furniture would come in later, maybe sanitary ware as well. But in the cycle that is yet to play out, and the natural inclination to start buying real estate stocks because real estate is going to do well, I think has some flaws because most companies have limitations in how fast they can execute. And in fact, you would reward companies that are being careful and relying to only take on as much as they can execute and not try to expand too fast. But so on the real estate stocks themselves, I'm not sure if there is yet more upside. But on things that go into construction, yeah, those things can scale up faster. And there, I would be a lot more constructive.
If you like this video, then like, share and subscribe to ET Now.